I think, where we're in the third phase, which means we'll get a overreaction in gold over the next 2 to 3 years, where we could see gold go from the current 2,400 to 5,000 or 10,000, maybe even 20,000. It could get this parabolic move where it keeps going up, up, and up. I am, and many of my peer group are convinced the breakout is here. Brighter days are ahead for gold people, gold investors, but that doesn't portend well for the rest of the economic system as we just outlined. Silver, of course, is needed in technology and for war. So it's got kind of a double. So I think the precious metals have a very bright future ahead.
Gold is off to a positive start this week, with spot gold trading at $2,311 per ounce. According to DavidMorgan, the silver guru, we may enter the third phase of a trend that could see gold prices surge from the current $2,400 to as high as $5,000, $10,000, or even $20,000. This breakout in gold signifies brighter days ahead for gold investors, although it may not align well with the broader economic system. However, gold prices face near-term challenges from a hawkish Federal Reserve rate policy, while silver is entering dangerous reversal territory, with long positions hitting a multi-year high, as highlighted by precious metal strategists at Heraeus in their latest report. Despite a boost in gold prices following 2 G7 rate cuts last week, the momentum could have been more lived. DavidMorgan also sees a promising future for silver due to its dual role in technology and as a haven. More affordable than gold, silver appeals to investors who may need more means to invest in gold, suggesting significant potential for price increases. Regarding silver, Heraeus analysts noted a sharp slide on Friday, erasing gains from earlier in the week. Despite net ETF outflows in recent months, non-commercial positions on silver futures continue to accumulate, indicating support from hedge funds and other leveraged speculators. According to Morgan, China's increasing investments in gold and the trading of silver on the Shanghai Gold and Futures exchanges signal a significant market shift. With potentially 1.4 billion Chinese interested in silver investment, this growing demand underscores a bright future for gold and silver. Furthermore, Bloomberg reports suggest China's silver imports may surge in the coming weeks due to strong industrial demand and a price advantage in the Chinese market. Join us as we delve into DavidMorgan's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Gold is a barometer, not a thermometer. It's already broken out, and so the trend is in place, and it'll probably last for the next 5 to 10 years. It could go the way I think, where we're in the third phase, which means we'll get a overreaction in gold over the next 2 to 3 years, where we could see gold go from the current 2,400 to 5,000 or 10,000, maybe even 20,000. No one knows, but it could get this parabolic move where it keeps going up, up, and up. I remember Cisco stock back in the beginning, and people didn't know really what was taking place in technology in the early 2000s. I mean, there was a precursor with the tech bubble that popped, and a lot of things just went by and by, but some of the things like Cisco continued on because it was so required. And I remember one of the stock analysis saying, this stock goes up every day. And that's probably what you're going to see in the gold market at some point. It's like, God, and then it went up 13 days in a row, that type of thing. But we're not there yet. But we are, or I am, and many of my peer group are convinced the breakout is here, and brighter days are ahead for gold people, gold investors. But that doesn't portend well for the rest of the economic system as we just outlined. Silver, of course, is needed in technology and for war. So it's got kind of a double-edged sword because it's also considered to be a safe haven, second place to gold, obviously. But yet there's a lot of people that can afford silver that will not or cannot at this point afford gold. So I think the precious metals have a very bright future ahead. And I think it's going to be rather astounding the price levels that are achieved relative to some of these other markets, because they have been undervalued for so long. When they swing back to their, let's say, fair valued position, that will be kind of an aha moment. But most markets go undervalued, fair valued, and overvalued. So what does an overvalued silver market look like? What does an overvalued gold market look like? And the answer is, we've never been there before, where people are competing with each other to preserve their wealth at the same time on a global basis. It's been on a country by country basis. where you might be in Weimar Republic, or you might be in Argentina, or you might be in Turkey, or you might be, Russia, you might be in some place where the currency is being destroyed. And in that particular outlet, you're very much, if you have any wealth to preserve, you're moving into the precious metals. But it's never been globally. And we're starting to sniff that out now with the Chinese. The Chinese basically have not only bought gold at the national level, which they've been doing for years, but it's now at the street level in a big degree. And when I was in China, I said this to one of my Chinese friends. We were talking to silver market, and I told him that when I was there, I went, I was in Beijing. I mean, I'm in the capital, and, there's lots of activity, commercial activity. And I was going, I won't say all over the place. I was only there 10 days, but I went to several places to try to buy silver as an investment at that time. We're talking, I think, 2008. And the only thing I could really find to buy were like chopsticks in silver, right? But now the Shanghai Gold Exchange and the Shanghai Futures Exchange is trading silver, and the masses are starting to catch on. Well, you have, 1.4 billion Chinese that want an ounce of silver. That's a pretty big market. And I'm kind of joking and kind of not. There is a investment demand for silver in China now that has not been there since the Opium Wars. So it's a very, very interesting switch.
China's gold holdings remained steady at 72.80 million troy ounces at the end of May, maintaining the same level as the end of April. However, China's gold reserves rose to $170.96 billion in May, up from $167.96 billion in April. Morgan highlights China's strategic decision to reduce its holdings of U.S. treasuries while increasing its gold reserves as a prudent risk mitigation strategy. Amid concerns about the reliability of fiat currencies, gold has emerged as a historically trusted monetary asset. The People's Bank of China, traditionally one of the world's largest gold buyers, halted 18 months of continuous gold purchases in May, coinciding with record-high gold prices in April and May. Bloomberg reports suggesting that apprehensions about declining demand for gold contributed to some selling pressure on the precious metal. Moreover, Morgan underscores China's off-book holdings of U.S. debt in Belgium and other entities, indicating a complex financial strategy to manage debt repayment in U.S. dollars. Let's get back to the interview.
Gold-silver spread that took place in years gone by. So I don't know exactly a good answer for you other than, yes, it will continue until it doesn't. Is it a week away? No. Is it a month away? No. Is it 6 months away? Perhaps. Could it be closed with, let's say, power from government? Yeah, it could. In fact, if it goes on more than, I'd say, 3 months or so, my guess is that there'll be someone stepping in and saying, well, any exported, silver will have this VAT added onto it to go to China or whatever. They already do that for India. I mean, there's a lot of games that are played, especially in silver, with value-added taxes and other things that you don't know about until you're on the other side. So even though there's that $4 spread, can you take advantage of it or not depends sometimes on whether or not there's a VAT added or there's some kind of import tax or whatever. And the way you get around that is that $4 does exist. And if you smuggle it in without a VAT or an import, border guards taxing it as it comes into the country, you could take advantage of that $4, which is quite a huge percentage, as you well know. So it does take place.
Why would China be dumping treasuries and buying gold?
Well, I think it's what a money manager would do. They're hedging their bets. They're betting that the money of all time, or the last 5,000 years, the most sacrosanct, the only monetary asset that's not a liability at some level. So you continue to up that. And at the same time, one that's the most trusted at a point in history that can't be trusted based on what we talked about at the beginning. It can't be paid back in value. It can be paid back in pieces of paper. Mitigate your risk by buying gold and having less risk that financial instrument. So it's just common sense. So there's a subset to that, though. The Chinese are doing what you said, but not to the level that I thought. I did some research on this recently, and some of the Chinese holding of U.S. debt is off their books, held in Belgium and other entities, which I thought was surprising. But there's a guy that does a real deep dive on Chinese financial markets, and I went through several of his interviews and realized from his work they need U.S. capital to settle debt. If they've borrowed in U.S. dollars, they've got to pay it back in U.S. dollars. So if you're holding T-bills, paying 5%, you may as well get interest on all that debt. The highest interest you could get is short term, which protects you pretty much from a big problem in the financial or the debt markets. And then you've got to have some. I mean, I can't pay you back in any other currency. I've got to have it in U.S. dollars. So they can only go so far. And have they gone as far as they are going to? I don't know. I don't have the answer. But the trend is obvious. More gold, less treasuries. Get ready for the reset. And maybe the BRICS will break away and start their own system. That's been talked about many times. Whether or not it's implemented in the way it's been outlined remains to be determined. But there is a shift in power. And we've always known from history that he who owns the gold makes the rules. When the British Empire ruled the world, they had the lion's share of the gold. When the United States became the world dominant power financially, the U.S. had most of the gold. Now you could say the East has most of the gold, and they're becoming the dominant financial power.
With silver entering dangerous reversal territory and China's off-book holdings of U.S. debt indicating a complex financial strategy, what strategies do you recommend for investors to navigate these evolving dynamics and capitalize on potential opportunities in the precious metals market? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.